Good afternoon, everybody. It is still May the 10th, and we've got a lot to talk about. We've got FOMC, we've got Russian nukes, and we've got a hell of a lot of volatility. So let's get started. I'm your wealth guy. Let's talk money. Let's talk market wrap up. All right, everybody. So first of all, thank you very much for tuning in. If you like what I have to say, please feel free to subscribe, like, and more importantly, comment. I'd really appreciate to hear your comments and love to see what you have to think in regards to the market. But let's have a look at the markets today because we have seen some incredible volatility today. Markets swinging from, in particular, the Dow from being up 500 points down to 300 points, swinging back and forth from positive to negative before finally settling down in the red, but very marginally. Tech, however, a little bit more stability, still had the same level of swinging, but a little bit more stable, a little bit tighter, finishing actually in the green where the Dow finished slightly in the red. Now, the other one is the US S&P 500, which is now a touch below 4,000. And if we can't get back above that 4,000 mark, it's going to be a little bit of a fall to the downside. There's not a heck of a lot of support for a little while here. So we do definitely want to watch that number for U.S. stocks. Otherwise, the movement to the downside for the S&P wasn't all that bad today. But let's have a look at the rest of the market because crude continued to slide quite aggressively today and is actually down below $100 a barrel, currently sitting at $99.40. If we take a look at the US dollar, it did tick slightly upwards, about a quarter point, nothing too significant. The 10-year yield, however, did continue to drop down over 2.5%, currently sitting under 3, so 2.997 to be exact. And that's interesting to see because it's now 2 days in a row to the downside. If we take a look at cryptocurrencies, we are starting to get a little bit of a positive momentum here. Currently, Bitcoin is up over 31,000, very barely, but it is above it. Looking at commodities, gold and silver did fall under a little bit of pressure today. However, the vast majority of commodities here did sit a little bit into the green, especially if we take a look at agriculture. Energy, a little bit on the red side, but overall, very mixed for commodities. But let's take a look at what happened. Why the wild swings today? Because if we look, and if you watch my earlier video from the morning, we saw that the markets were actually really well set up for a very positive day. Well, that was before Russia came out and said that essentially nuclear weapons are not really out of the picture and may be used in this war with the Ukraine. Now, the markets absolutely hate that word. And they reacted almost instantly, pulling the markets right down from being as high as I said, over 500, way down into the negative. And it sat fairly negative for much of the morning before coming back up later on in the day. And again, starting that seesaw battle back and forth. But what else did we hear today? Well, let's talk about some of the Fed members because we had Mester. Mester is the first one I want to talk about. I actually have some direct quotes and some notes here. So Mester wanted to talk about how there is a need to see monthly numbers coming down in a compelling way. And she's talking about inflation here. Before I would want to conclude that we can now rest, meaning that they are looking to continue to increase the interest rate. And there's going to be no change until there's going to be a decrease. Well, these small increases in interest rate are really not going to help bring inflation down here. But let's keep going because she does say some other interesting things. It may very well be the unemployment rate will have to move up a little bit. We may get another quarter of negative or slow growth, but it's going to have to happen. Interesting. My question is, how much slower can the economy actually get? But there's more. If we take a look, she says the economy will be bumpy. And we have to accept the bumpy road ahead. Again, where can the economy actually handle any more? We have the producer index, which is at 75-year lows. CPI continues to move up. Jobs numbers are absolutely atrocious. But Waller decides to come out and say some as well, because Waller goes on to say, It's the time to raise rates now when the economy can take it. What economy can handle that? You see, I'm starting to wonder whether or not they're actually trying to set the pace here to actually cut interest rates down the road, or are they telling us they're really setting us up for a recession here? Now, if you are watching carefully, it does appear that we are approaching that recession territory. But let's keep going, because we have Williams also who had something to say. Williams goes on to say, expect to see the unemployment rates rise. So more people out of work. Initial jobless at the last report last week were horrible. There is an attempt to claim that there's roughly 2 jobs for every person that is currently out of work. You can believe that if you like. But let's keep going, because the economy right now can't handle too much more, really. It has been an absolute free fall for months and months and months at the very least. And even though you do have figureheads like Biden saying the economy is great shortly after we had some absolutely atrocious and horrible numbers, the truth of the matter is the economy really isn't all that stable, isn't really all that good. Now, typically, especially if we looked last year, the worse the news was, the better the markets performed. But let's see going forward how much further the Fed can actually handle, or the markets can actually handle, increases in rates. Now, I did see on 2 other Fed members discuss that there is going to be at least 2 more 50 basis point bumps on the interest rate. We'll see, and we'll see what happens after that, because I'm really interested to know the direction as a result of increasing rates, losing additional jobs, forcing a recession, or are they eventually going to backtrack like they did years ago, cut the interest rate back down when the recession gets too high? Because you see, recession is not a friendly term, and no president actually wants that on their shoulders. But let's have a look at the markets for tomorrow. So if we take a look ahead, it's really important that we take a look at the US, the S&P 500. If the markets cannot get back over 4,000, as I already mentioned, we can expect that the markets are going to pull back a little bit further. Now, this C sign today actually shows a little bit of an interesting point here. There is a lot of buyers at this level. And that's actually very good for the market. It suggests that there could be the possibility of a little bit of stabilization, or maybe a bottom to the current pull down. But we'll have to see, because if the S&P cannot hold this $4,000 level, or this 4,000 point level, it could very well drop significantly lower, at least another 400 points, which is very significant. Otherwise, if it does hold this level, we can almost expect to see the Dow Jones start to move to the upside. Remember, the S&P is a broader stroke of the market, whereas the Dow Jones is a very tight, closed camera lens of the market. Now, NASDAQ today finished actually up in the green. It's up currently at 114.42. And that's a great sign as well, because tech has been absolutely slaughtered over the last 3 to 4 months. So it's nice to see that tech is holding at least levels today. Will it continue to hold? I'm not quite sure. It's already considered well outside correction territory, probably into bear territory at this point. But let's see what happens from here. Again, we are at very critical levels to the downside. If we do find support, that's fantastic. It could mean, or could signal, a bottom where buyers are starting to come in, because there is a lot of stuff here on sale. A lot. Just look at the banks, for example. Financials are absolutely hammered. They were hammered again today, which really brought down much of the market. But there's a lot of stuff on sale at this level. So we could very well see some additional buying coming in. Now, is that guaranteed? No. Can the markets pull back even further? Absolutely. It's really just important at this point, with the volatility and everything going on economically, to just keep an eye to what's going on in the market. But in any case, this video has gone on a little bit too long. I focused a little bit too much on the Fed, but it's important to hear what they have to say, because often enough, It seems like they're giving you one piece of information, but if you listen closely, there's actually a hell of a lot more. So what do I expect for tomorrow? We'll have to see. I think the markets are currently sitting pretty level for the overnight right now, as we are in post-market. Let's see what happens. I will see you all tomorrow at the opening bell.